I think what we're trying to do weekly is a macro review of the markets. So I think we were just going through our weekly clip on what's going on. I think the big news is, of course, the one of the biggest IPO of recent history, or I think forever, to be frank. Basically, where we are seeing that there is the $75 billion were raised, and I think it's more about we have been discussing for quite some time in terms of how the actual amount of cash which moves through the market is not that big, and how when we talk about these numbers in billions, they sound small because when we are used to the market caps of trillions. But we need to understand that the real money flow is not that big because it's a paper money. So we have been discussing these things in our macro channels. So just wanted to make sure people understand the impact of it and how big it was, in the sense that it was one of the biggest ever. In fact, if you count many of the IPOs of recent history, I think it is even eclipsing everything combined. But coming back to how it impacts the market and how we should think about it, let us go through that. But I think most important part is market did go through a correction in preparation for this kind of a IPO. And if you remember, there was one big thing which happened also was that we had Google coming out even with a bigger issuance. Of course, they had some part of convertible debt and some equity which they have announced, and we are yet to hear how much of that is already already gone through the system. But definitely there is impact on how these equity issuance are happening. Even some smaller companies like SMCI and so on have announced that they're raising money using equity. So what does it mean? I think we did talk a little bit earlier, but basically the goal here is that we try to break it down into how markets are reacting and what is really happening in terms of the charts. So let's go into the chart as usual. So market did, as we discussed, right? So market did correct pretty significantly, even though I think as we have been tracking that usually the support lies more near the previous highs, which is around 7,000 mark on SPX. But even from releasing the steam perspective, it did release the steam significantly. And as we all know that there are multiple factors here at play. We did when we were going through the reel, we were also talking about how this is pretty much a problem in terms of inflation, the war, the oil prices, and everything else. And that I think in the last couple of days, the news on the war front has been positive. I think we did discuss how the volatility was low, and even when the market was correcting, I think the volatility was not that kind of high, but the war fears and the new strikes from US on Iran that actually resulted in a peak volatility situation last week, which ultimately kind of resolved after the news. And as I think for the 100th times, Trump has announced that the war has ended. What happened since then is, I think today there has been even more positive news where it says that they are talking about Iran confirming, and also the Pakistan made a statement that they are actually seeing there's actual agreement being signed from. And so I think market is kind of coming to terms. We are seeing that in the oil prices, which have come down significantly. I think the ultimate psychological mark is, of course, coming down below $80, which is where we used to be before the war. And definitely there are concerns around that because it will take some time for market to really get into the same kind of, I would say, supplies coming in from Strait of Hormuz. Because if you remember, oil is not like you can just turn the tap on. There's a lot of production hit. There's a lot of tankers which are missing from the strait. And even if everything resolved, it takes almost minimum 2 months. And to go through the system, through refineries and so on, it's a whole supply chain of 3 to 4 months. But I think overall what it means is that maybe the futures and the immediate values will not come down below 80, but I think market is already always forward looking. And that's, I think, one reason why the correction stopped here right now. On the other hand, technically, as we said before, like if you look at the numbers, so let me just take this line off because this is where the original one, the trend was, which we broke. But I think if you see here, now the key levels to watch would be whether we could, is this a bounce from the drop? or whether we actually go and try to hit all-time highs. And why, again, going back to the SpaceX IPO and the Google issuance is important is, remember that we had to absorb that much amount of liquidity. We're talking about hundreds of billions of dollars right now. That is, I think, significant when we have this correction of, let's say, around 5% or so. So if you see, the Nasdaq, of course, got hit harder, as we have seen. This is always the case in terms of tech stocks. And if you look at specifically semiconductor, which was like running very high, of course, it doesn't look big in the, even if you look at the rally, like how much we had gone up, it looks very similar to what happened in kind of early May. But overall, I think trends are still positive. I would say semiconductor is getting a really fast bounce. In fact, the semiconductor index is almost catching up to its all-time high again, while of course, we are still waiting for the rest of the market to follow. So this is, I think, the key thing here is big liquidity went behind us. So why it matters is that with the kind of interest, and especially because the retail participation was huge in SpaceX, it does matter when we see these kind of liquidity hitting and a lot of people selling. So at this moment, market is justifying that as a one big event behind us. On the other hand, we have Anthropic and OpenAI already lining up, looking at how successful SpaceX IPO was. And let's talk a little bit more about that as well, right? So we are talking about SpaceX IPO, which is of the like if you look at the SpaceX itself, it listed at 150. It never even came close to issuance price. It was always trading above. It touched a high of 176 through the day. So if you go into the intraday chart, and of course there was a selling after that. So this is where I think we are seeing that where does it settle will be interesting after market is again trading up. And as we have been discussing on our macro channel on the WhatsApp, we are going to see a lot of like almost 4 times the supply coming online in next 2 months. So, and with the valuations, which is like, we are already talking about more than 2 trillion. With again, it's more of a story, right? You cannot talk about valuations for something like, it's almost like you're buying a $2 trillion startup, because of course they have huge plans, whether we talk about data centers in space, whether we talk about expanding the Starlink, or even the colonies on moon and whatnot. So there's a lot of excitement, I would say, because it's one of a kind. We never had like you cannot invest in anything like this before, and I think that's where it's setting a new precedence, because of course we are talking about like their goals are something which is like changing the humanity and course of the future. So anyway, coming back to, as I said, this success of the IPO is more important from a perspective of confidence in the market, from the kind of perspective of how you can expect it to be follow up with Anthropic and OpenAI, which is again going to be like, supposedly they are quoting at $1 trillion valuations each. So you can say among two of them, it becomes very similar size as SpaceX. And now I think we are already hearing all the excitement around Anthropic. They become hot and cold all the time, because there have been a few discussions around how software companies are concerned about the spending. There is a discussion around, I think probably they are a little late because their hype is slowly reducing into, can anybody afford to continue using these frontier models and so on. So that will be very interesting as we go along. So I think one more thing I would like to discuss is the story keeps boiling down to the software stocks, which I think keep getting hit, as we were discussing, because the biggest story going around for quite some time now in this whole rally, software stock and the IGV, which is a tech sector ETF, had been struggling, which actually caught up a little bit. It started to break out in early June before this correction hit. And we are seeing that it is still kind of, I would call it as just a correction in uptrend, but it will be very interesting if the story keeps changing around whether the OpenAI and Anthropic's directly running on semiconductor stock, as stacks are going to be the future, or we still have future of these intermediaries or software companies. Very important to watch out how market reads into it, and how it goes. Now, coming back to macro, oil price coming down also means that yields are kind of cooling down a little bit, which is very critical. We did talk about inflation. We did talk about how market was getting worried. And again, in our usual weekly update, we talked about how rate cuts are completely off the table now. In fact, there is a 50% probability of a rate hike, which is kind of a scary thought for the market, because if we go into the tightening cycle all over again, the valuations get questioned in the market, especially with 10-year yields were at one point threatening 4.7%. So still not out of the woods, I would call it. Inflation is still running hot. Now, the expectation from the market is that probably Fed will see this under, especially with the new leadership of Kevin Warsh as a chairperson. We might see push towards that this is just a aberration because of the war, and we have this whole discussion about transitory inflation. Kevin Warsh has his own ideas around how he has previously shared that he doesn't believe in the some kind of spikes in the inflation, and they call it as a trimmed mean inflation numbers, which basically ignore the big movers in any kind of inflation number and more look at a more steady inflation numbers. So having said that, there is a Fed meeting coming up, FOMC meeting coming up, the first meeting with Kevin Warsh leading it. It will be interesting to hear his press conference next week, and market might react to that. On the other news, I would say in the macro perspective, we did see gold breaking down below its trend line, which is kind of, I think for short term, it broke down and it's trying to come back above. I would not call it convincing yet. But as we had been talking about since January, when it was super hot and we had called out that it can correct. I think we were happy around here on this long-term trend line, but we are now watching very carefully whether this trend line holds. And as I said, this is a pretty long-term trend line we're tracking all the way from November 2024. But on the other hand, yes, there are a lot of support in the 4,000 area. So I would not give up on gold long-term trend yet till we hold above $4,000. And especially with yields coming down, with war settling up, there can be some hope around it. Just like I think Bitcoin, I think we had discussed last week as well that it was looking weak, and 60,000 was the zone, which is again a long-term trend line after the correction. And if you look at typical, I think, bear market for Bitcoins, previously in a 4-year cycle, we made around November. So again, if you are a long timer into Bitcoin, you know that it is a whole 4-year cycle. And we did have, I think, 2022, around similar time, I would say late 2022, 4 years ago. This was the status where it was looking down and out after making a new high. And we formed the long-term trend from here and broke out into the new all-time high. So I think crypto people are trying to figure out where's the bottom this time. From a time perspective, probably it's towards the end of this year. That's where the 4-year cycle ends. From a inflows and money flow perspective, I think the macro, as we discussed, is very critical, because ultimately Bitcoin is much more demand supply and money supply function, and not necessarily it doesn't have its own valuations or any kind of fundamentals other than supply and demand. And as we have seen, MicroStrategy is one of the biggest buyer of it, and they have started buying all over again after the initial scare early June when they sold a very small amount. And the debate continues on whether they can survive this downturn or not. So I will avoid getting into that. I think we have talked enough with our All Access members on this. So let me take a pause here. I think this is the big picture view and the charts. And we can talk through if there are any questions or comments in the chat. Would love to discuss that with. If you have anything, please feel free to put it in your chat and we can answer. Overall, I think the biggest news from, I think, what we have to watch out now going forward will be still how I would say, semiconductor continue. As we have mentioned, that this whole rally, which has been going on from March end, has been very narrow rally. Even now, when we see the recovery happening, we are seeing pretty much semiconductor being the leader in this move up. We are seeing software still lagging. We are seeing stocks like Meta, Microsoft, and even Apple was lagging till they came out with the announcements around the Siri AI, and I think it made a high because Apple is definitely, these are the kind of stocks which I think were not participating in the AI rally. And now the question people are asking is if we are in for a shift in like how these tech companies are valued. One other question is around the hyperscalers, right? As we are discussing in recent days, like we have seen hyperscalers lagging just purely because the questions being asked around how they will maintain their moats, right? Means if Apple came out and they announced, and it's very important to discuss from the WWDC that they would, even though they're using Gemini model, they are asking Google to, host it on their private cloud. There's a lot of debate around how this AI will evolve from enterprise perspective because because Anthropic or OpenAI have built this whole idea, or even Google, as the frontier models, and using the whole old style SaaS-based models like API-based models. On the other hand, Apple deal with Google shows that they're willing to pay for the IP, but not at the cost of, as usage cost. It's more of a fixed cost contracts. Um, so it's a very interesting data point to watch out for. If means of course Apple is a unique customer, they have one of the biggest distribution. Not everybody would be able to achieve these kind of deals, but it also sets the precedence of how big enterprise, which is probably the biggest consumer of software, or if you look at how the valuations are in the AI world, they are expecting big enterprise to keep spending on APIs. And we did talk about previously how Microsoft and others are already moving away from it. They're talking about, do you really need frontier models for everything? Like 95% of tasks can be done with open source models, or some cheaper models. So the rumor nowadays going around is that now everybody has to cut prices, or even create maybe two tier or three tier systems. And I compare it with how, for example, you have a Toyota and you have a Ferrari, right? Are the frontier models more similar to Ferraris of the world, where you do probably, you can go, they're very good for very complex tasks or racing, or you can call it like the high end tasks. And can 95% of the tasks be done by cheaper models? And if that is the case, would OpenAI and Anthropic try to achieve the same things? Would they try to create these kind of uh, dual models where they try to come up with cheaper APIs, and rather than going for older models, can they come up with a newer models in two modes? So it will be very interesting how AI evolves from here. On the other hand, I think one thing is certain: the market has already priced in that the real moat exists in the compute within the data centers, and that's why I think semiconductor were running up. They are priced for continuous spending. Money is tough. In like debt market is already not offering easy loans, and that's where I think equity issuance has become important. And can they really sustain the liquidity? That is a question in near future. While the I think the overall market enthusiasm is still there, what we saw in SpaceX IPO. So let's watch out for that. And I think as we have been talking through the idea of this tech rally or being a narrow rally, the other question to ask is, if the war settles down, if the inflation start coming down or the oil prices start coming down, can rest of the market participate and catch up? Because now we have gone through this whole idea of releasing the steam from a kind of a very aggressive rally. And if that really pans out, then we can surely see a little more wider rally this time. That would be what I think one we will be watching for. We will be watching very carefully how the next couple of weeks play out. And so that is going to give us some ideas. And of course, a lot of news coming with the FOMC meeting, with some of these new IPOs timelines being defined with OpenAI and Anthropic and so on. The world is going to change very fast with so many multi-trillion-dollar companies joining, and the way the Nasdaq is including it in the index, and many other, I think, indices like Russell 1000 and so on. They are kind of creating a passive inflows into a totally new wave of companies. It will be probably will be in a very different world where the valuations can move very fast. We are priced for perfection. We are priced for AI-driven world where we will have kind of abundance of compute and making very fast progress. So that's something which what we are pricing it for. But will AI at some point shock that are we too early into the hype? Are we underestimating how fast this can continue going? So this is where I think the balancing act which market has to find out. So I don't think I see any questions right now in the chat, but we will continue discussing this in our macro group. So do join our WhatsApp group if you're not there. Looking forward to continue over the summer, over there, as I think we have some travel plans, so probably may not be doing that much of these macro calls every week. But I think we will keep going with our usual weekly updates, with our team putting together, as well as we said, we are having very good discussions in our WhatsApp group. So keep contributing and let us know what you're thinking and what are the top of the mind items for you as investors. Thanks a lot and have a great summer, everyone. And looking forward to continue this very soon, I think maybe, and we will try to do as many times as possible over the summer. But I think uh, I hope people can understand. So one final thought I would say is that the market is going to be unpredictable and volatile for some time, because what we have seen with the kind of buildups we have seen with the huge IPOs, we have seen there is enough appetite in the capital markets. Um, Equity issuance is becoming big deal from mega caps, so there will be a lot more flood of supply. So while the appetite is there, this can create an imbalance, especially the imbalance in the world of huge leverage, with the options driving pretty significant amount of volumes where, and then you talk about the market makers getting even more aggressive tools in terms of the AI-based data centers. If you see Citadel of the world and Jane Street of the world, who are running the market, who are running the book, they are themselves running their private data centers, which are very, very powerful. So remember one thing, that markets can move very, very fast in both directions. So if you are an investor who plays short term, just watch out for how this market is changing in the 2026. And it's what I can promise you is that 2025 and before, whatever you saw, that may not happen, or the patterns may not repeat. So just we are doing our own, like at Proflex, we have been analyzing this data. We have seen how things are changing. We have seen how the extremes can be more extreme. So be ready for that. That's all I would say as we head into the summer. There can be big moves in both directions, and one has to be careful if you are on a short-term trading. So with that thought, I think have a great weekend, and looking forward to continue connecting with everybody here over our macro channels. Thank you. Bye-bye.